with over 1,000 companies reporting. But I wanted to take a look at some companies that might be reporting good news. These are companies in areas that have seen a little bullish momentum, like travel and energy, but even a toy company that's seemingly holding up fairly well in this rocky market here in 2022. So what are these companies? Let's dive in and see who is doing well this year or even maybe this earnings season. The first company I wanted to cover is Booking, formerly known as Priceline, ticker BKNG. I own this in my own personal portfolio, and as you can see, it's maybe not as good of a chart as what you might have thought, right? Because travel is supposed to be the big thing this year. Nobody is spending on clothes anymore. And so they're shifting their spending, but they still want the experiences and travel. And all the airlines have said that bookings have been strong well into the winter now, and people are still getting out there. So wouldn't that be true for Booking or Expedia, which also reports this week? I took a look at Booking here. It does have a good earnings surprise track record once you get out of 2020, which is the start of the pandemic when there was chaos, of course. So it's put together that nice streak there of 7 beats in a row. But year to date, these shares are actually down 22%. They're up off the recent lows, and they're very volatile, as you can see. It's seemingly like, yes, travel is back, but no, it's going to be down. Yes, it's back. No, it's down. But ultimately, still down 22%. Now, does this mean they're cheap? Shares are trading about 20 times and you don't get a dividend. So are people still interested in these big online travel agency type companies, or are they going to start to see some more pressures come in as the global economy slows down? Nobody knows. Maybe that's why the shares are a little weak here. But this is one area of travel I'm going to be watching. Then we're going to switch it over to energy. I brought a couple energy companies because why not? Look at the chart. This is ConocoPhillips, ticker COP. I own it in the Zacks value investor portfolio, and it's always kind of recently been the small little brother to the big integrateds like an Exxon or a Chevron. But why should it be? It's actually beat 7 times in a row and now busting out 2 5-year highs. Year to date, these shares are up 76%, not too shabby. Forward PE of just 9 because those earnings keep rising. Dividend is yielding 1.5% on the websites, but a lot of these energy companies are paying special dividends and huge share buybacks. So that's not a complete accurate picture of what's going to the shareholders. But everything seems to be going pretty well for ConocoPhillips here. They have raised their amount back to shareholders the last couple of quarters, but energy prices came down this quarter, so I'm not expecting the same thing, but still very generous back to the shareholders. And we'll see what else they announce. But ConocoPhillips, it has the momentum, and you can't say no to this chart. Then we're going to switch it over to Funko, ticker FNKO. I also own this one in my own personal portfolio, and I've owned it for several years, even pre-pandemic. But it's been kind of a wild ride, as you can see. They have not missed since our data began there in 2018. So they do have this good earnings surprise track record. But, it's all based on, consumer sentiment, really, because Funko makes those pops. And those are kind of a collectible and a toy mixed into one. And they're also expanded into the toy category with games. That's big for them now. And they have the great brand Loungefly, which you might have seen if you've been at Disney, where those are like the backpacks and the purses and other accessories that have, various characters on them. They're very nice, kind of good quality, accessories, we'll call them. So Loungefly, big, fast-growing business for Funko. They also just had the ex-Disney CEO join the board. I'm liking that. The shares, though, year to date, they are up about 8.7%, but kind of just treading water here. But that's better than what most companies have been doing this year. Shares are also pretty cheap at about 11 times forward earnings, no dividend, because it's a kind of a small cap growth company, but has that value component. So that's why I like it. Some of the other toy retailers have been reporting just okay quarters and a little bit of nervousness about inflationary pressures on their customers. Will Funko see the same? We don't know, but we're about to find out. Then we're going to switch it over back to travel, and with Hyatt Hotels, ticker H. There's a couple other hotel chains also reporting this week, along with some of the timeshare type of companies, their vacation arms. But Hyatt, I just picked because it is one of the more popular brands. You can see it's beat 3 out of the last 4 quarters, but these shares kind of, again, just treading water here, waiting for a catalyst. And year to date, now down about 3%, but that's still beating the overall S&P 500. So not a bad year so far. PE, though, is at 138. I kind of had to do a double take on that one because maybe the market is getting ahead of where the earnings are in some of these hotel chains. And so you're not getting it that cheap. But what will this look like going into 2023? I feel like, again, we're waiting for a catalyst on some of these travel names. Then we're going to wrap it up with another energy company because why not? It's the best performing sector. And if we're looking for some good news, energy is where you've got to go. So my other pick is EOG Resources, ticker EOG. It's also a big cap producer. And you can see it has pretty good track record once it got past some of the chaos at the start of the pandemic. It has missed twice here in 2022, so that's a little unusual. But still, year to date, these shares are up 50%, so still getting the big gains, trying to get back to those highs that it hit a little bit earlier there in 2022. Still cheap, like Conoco is, with a PE of 9. Dividend yielding 2.2% on the site. But again, a lot of these companies paying special dividends. Sorry, got a frog in the throat. And other shareholder benefits. So you got to really tune into these conference calls, check on their investor relations website to know what you're really getting with the dividends, any kind of variable dividends, and share buybacks. So EOG Resources, one of the industry leaders, I'm going to be watching this one this week as well. I made it through another week without a lot of construction noise here in my apartment. So that's a big win. And who knows what might be happening next week, but I do know that there's going to be more earnings coming out next week. We're still going to get a lot of the restaurant names. We still haven't really heard from much of the retail sector, and that's always very interesting going into Black Friday. It's coming up soon, and the holiday season, which is basically already here. I don't know about you, but I've been getting the flyers in the mail. Just got one recently from Ulta that was their holiday flyer. So things are happening on the retail side, and we're going to hear from all those companies as well. You don't want to miss a single episode of the Earnings All-Stars, because again, I'm still bringing them to you for the next couple of weeks. And you can get them all at Zacks.com/YouTube. That's our YouTube channel. Be sure to subscribe, and I'll see you again next week with some more charts.